If you're buying a home or thinking of refinancing, stop scrolling. In the next few minutes, I'll show you exactly what's driving mortgage rates this week and why. Folks, my name is Dan Frio. I'm the host of the Rate Update. I'm also a licensed mortgage loan officer in all 50 states as well as Puerto Rico. My mission's this. I want to break down what exactly is moving mortgage rates so you're not guessing. So this week, we're going to talk about all the stuff that the Federal Reserve watches and also the markets. It's inflation. I'm going to connect the dots between oil, inflation, the 10-year Treasury, and these things over through here. So the first thing I like to do when I start my day, I like to start my day with the chart. And this isn't good news, folks. All you have to understand is that number over in the far chart over there. If you look up there, it's minus 13. That's not good news. All that means is if the number's red, that means mortgage rates are going to go up. The bigger the number, well, the bigger the adjustment. What I want you guys to see is here's where the mortgage bond is. And a lot of people think they watch the 10-year Treasury when they're trying to figure out where mortgage rates are going. You can do that, but why wouldn't you just watch the mortgage bond that trades on Wall Street that's right over there? So the difference here is you can see at the numbers at the top, okay, they're a little bit different. The one over there that says the MBS, it says 97.43. Then you look at the one that sends a 10-year Treasury, it says 4.576. The difference is the MBS over there, that's the price of the bond. Over through here, this gives us the yield. Why they do that, I have no idea. So I just thought I would explain that to you today. So there should be kind of a good correlation with these when it comes to the rate and the prices. But when you see it on the screen, it's a little bit confusing. So let's get over to see what actually moves these things. And the things that move mortgage rates, they're oil. It's inflation on the consumer side, the producer side, and it's also what the Federal Reserve is expected to do at the next few meetings. So let's take a deep dive into the economic calendar we have this week. We have a jobs report, we got consumer inflation, we got producer inflation, and then hopefully we get some resolution in Iran. Let's go figure that out. So the first thing I like to do after the chart, what economic news am I going to get today, this week, that would affect these things? Well, let's look at it this way. Here's the correlation between all these things. When inflation goes up, the Federal Reserve gets scared. Okay, that means the prices on everything are going up. How do they curtail it? Well, they usually go in and increase rates. Okay, but this time they're saying, well, it's basically predicated on oil. Think of it this way. Oil was $60 a barrel about 3-4 months ago, before the Iranian conflict. Well, inflation was coming down, and the Federal Reserve was pretty comfortable where things were going. And then mortgage rates dropped below 6%. First time we've had that in a long time. And then what happened? Iranian war started. Oil went from $60 a barrel up to $120 a barrel. Well, think about it. Everywhere you go, you're using gas or you're using some kind of thing that is produced by oil. So the higher oil prices go, well, the higher inflation is going to go. Higher inflation means the Federal Reserve might have to increase rates. And that's not good news for these things over through here. So what we do is we try to take a deep dive in, where's inflation going? Well, we start with oil, then we look at inflation on the consumer side, then the producer side, and then we're going to take a look at what's the Federal Reserve most likely going to do. Then I'm going to show you at the end of the video what I'm advising my clients. So let's go over to the economic news we have this week, and it's action-packed. On Monday, we have federal member Baumann speaking, and I hate when the Fed officials talk because the media always grabs something out of there to pull out to kind of make market reactions. So really nothing coming out today. Tuesday, we're going to get ADP payroll reports. That's actually coming out pretty darn good. They're going to tell us how good or bad the jobs market is. What I'm saying is there's still low hire, low fire. It's kind of an equilibrium. The unemployment rate right now is 4.2. Historically, that's where it's always been. So then we're going to look at inflation. Well, Tuesday, we get consumer inflation. That's what you and I pay. On Wednesday, we're going to get producer inflation. It's kind of back to back. So let me give you the data that we're going to go over tomorrow when it comes in, and that's consumer inflation. Well, we're going to get a couple different numbers. If you look at these, there's 4 different numbers when it comes out to these. Let me explain what they are. First, let's start at the bottom, CPI. What CPI is consumer inflation. Basically, what they do is they take a basket of goods like eggs and steaks and other things like airline tickets and gas prices and things like that, and add them all together. Things that we usually, buy. And what they do is put a price tag on it, and then a week from now, they check it. Where's the prices going? That's called inflation. Is it going up or down? Okay, so here's what they look at. Consumer inflation year over year, they're saying it was 4.2. It's going to plunge to 3.8. I don't know what's going to come in, but we'll check this out tomorrow, because as long as it's starting to come back down, that's good news. The only reason why this might come down is oil, but what we want to do is take a look at month over month to see where the inflation's going, because remember, a few months ago we had the Iranian situation, oil spiked to 120, now it's down around the $70 range. So this is going to bring down the inflation numbers. So to look at that, we look at the core numbers, because it strips out food and energy. So we want to see, okay, this one includes food and energy, this one doesn't. So is inflation really going to come from oil and energy? That's what we're trying to figure out. So if you look at the CPI, this includes food and energy. They're saying month over month it was 0.5. It's going to drop to negative 0.1. That's a pretty big move. But then we're going to look at the core numbers. Remember, this extracts out the food and energy. So if it's energy that's really the culprit of inflation, well, this should start actually retreating. So what they're saying is the last reading was 2.9. They're expected to stay at 2.9. Same thing with the month over month. They're saying it's a 0.2. It's going to stay at 0.2. We're going to see how these come out, because again, this one's going to show you with oil. This one's going to show you without. We want to see, is oil really the culprit of what's affecting inflation and rates today? And then we got on Wednesday the producer inflation, and we're going to get all four numbers. So we're going to figure out on the producer side, is it energy that really is a culprit, or is it something else? So we're getting back-to-back consumer and producer inflation this week. So we're going to take a deep dive into that as well. So the rest of the week, what do we have? Well, on Thursday, we got continued jobless claims and initial jobless claims, like we usually do. And this is also going to show us probably there's a low hire, low fire environment out there. But now let's get over to what's happening today. I want to figure out, because it's Monday, what happened over the weekend and what's going on with oil, because now you can see if oil prices go up, well, that's going to make inflation go up. And then what's the Federal Reserve going to have to do? Increase rates. So let's go over and see where oil's at for today. We got oil at $73 a barrel, almost at $74 a barrel. I'm still shocked, because of all the stuff going on, that this didn't jump to about $100 a barrel. That's giving me some relief there, but we're going to pay close attention to what's going on with oil and the Iranian situation, plus the consumer inflation and the producer inflation coming out later in the week. And that's the things that are going to affect mortgage rates. But let's get over to see what the Federal Reserve is going to do, because the Federal Reserve and many members of them and many members of Wall Street and the mainstream media are coming out and saying, well, the Federal Reserve is going to cut rates. No, I'm still saying there's no way they're going to increase rates once or twice over the next year. Let me go over to what I'm advising my clients to do. And if you need some help with this, if you're looking to buy or refinance your home, I'd love to help you out. So if you're a homeowner currently, what do? Well, you might have missed that 599 rate a couple months ago, or you might be, Dan, I'm buried in debt. What do I do? Well, we got some tools for you. Go to our website. It's therateupdate.com. And if you're a homeowner and you want me to track those rates for you, or how much of a monthly savings would you want on your mortgage payment? I'll track those for you. All you need to do is put your information right in there. Rate Watch 2.2. I'm going to track the rates. So when rates get to 5% where you want them to be, I'll call you, text you, and email you, whatever rate you put in. But we can also track your payment. So you can tell me, Dan, if you can save me $200 a month, $300 a month, $500 a month on my mortgage payment, call me, text me, get me so we can refinance. But wonder if you're in a lot of debt. So if you're sitting there as a homeowner thinking, okay, I've got all this equity now, do I use it? Is it prudent to use it? Should I use it? We got some tools for you as well. So if you're a homeowner, put all your information in the Rate Watch 2.2 right through there. If you're drowning in debt and just want to figure out, does it make sense to use your equity in your home? Maybe you refinance your whole house into one easy payment. Maybe you get a home equity loan to solve that problem of deficiency and you don't have enough money each month to pay all those bills. Or maybe you have enough money and you saw some videos out there that say, okay, I can pay my house off under 10 years. How do I do that? We got those programs as well. So reach out to us for all these things, folks. But the main thing is, if you're out there and you need some help with a mortgage, you're looking to build or buy, or you're just confused with all this, saying, where are mortgage rates going and what causes them to move? Well, now hopefully you understand a little bit more about that by visiting my channel. So at the end of each video, what I like to do is I like to end my video with the chart. So let's go back to it. So we have the MBS market down 12 ticks for the day to start out the markets. That's not good news. That means mortgage rates might tick up just a little bit, but I'm still surprised that this isn't jumping much more than it is with the Iranian conflict escalating once again. So don't forget to subscribe down there. Join me tomorrow so I can explain to you guys what is going to go on with these tomorrow, the whys behind it, and what you should be doing if you're a homeowner or home buyer. Thanks for watching, folks. God bless. Have a fantastic day. I'll see you back here tomorrow morning, same time, same place. See you then. Bye-bye.